Hey guys, this is a market update. In this video, I want to reiterate why my trades are still open. I'm still long. I think we go higher and the cycle isn't over. Look at the last move of central banks. Cut. We are in a massive cutting cycle right here. However, real central bank rates right here are still in the green, meaning that the interest rate from central banks is still above their CPI metrics. So there's still a lot of room to go to the downside before they start getting very stimulative and we start talking about, is this the end of the cycle? Look at the US, 4.38% on Fed funds. Their official inflation rate is 2.9%. They're 1.5% above. They've got loads of room to come down before they start to think, well, we're way too stimulative. So we're in a cutting cycle and we can go a lot longer. 2.9% on the CPI. If you look at GDP, maybe they expect that to be 4%. The rate is now 4.38%. They want that to come down below GDP anyway, because the whole point is to debase the debt. So they can come down 100, 150 basis points easily. So that's going to happen. If you look at what Bitcoin is doing, long duration assets, tech, everything with growth is in a really good place right now. Natural growth is outperforming, but we are in a situation where liquidity isn't being drawn down. And so if that's the case, then the performing assets like Bitcoin and many other things are going to perform. And that's what they're doing. Yes, we came down from the all-time high. We are looking to go higher. This is very good price action. To be fair, right, this little drawdown here, this green box is the area where I really wanted to buy a pullback, right? This is the pullback buy zone. We got into this for a couple of days, not even to 100K, and then we've bounced. Right, this is a clear bounce at this point. If you look at the weekly as well, very obvious, right? We had this bounce here, all-time high, drawdown, all-time high, drawdown, second week now going higher, 115K now, right? It looks pretty positive. And as long as liquidity remains constant or a little bit easier, you got to be thinking that gold, Bitcoin, right, tech stocks, they're all going up. And so why would we be drawing down now? Why is this the top of the cycle when liquidity, central banks are starting to get a little bit easier even? So I'm positive for the cycle. If you trade crypto, click the Bybit deposit bonus link down below, up to $30,000 as a deposit bonus. You can get a fee discount and a deposit bonus on Apex as well, which is a decentralized exchange spun out of Bybit. If you can't trade on Bybit, you can trade on Apex with your crypto wallet. Link below for that as well. You guys know I call Bitcoin the trade of our generation, or the sweet spot trade. So let me explain. It's never going to be the best price performing asset over any short time frame, 1, 2, 5 years even, because other things are smaller and can grow quicker. They can change faster. And so you get a percentage move in the price that can be much higher. But that's not the game we're playing with Bitcoin. Bitcoin is a diversified financial index, right? It's digital money, digital capital, digital gold. So it indexes every single person that owns it. You buy it, you store it, you spend it. It is indexing the financial health of every single person, government, corporation that uses Bitcoin. So it's actually the broadest index possible. Indexes are what you save in over the long term. You can't capitalize or save in individual assets. They're too risky. They're too specific. There's too many things can go wrong. The CEO can change. The product can get bad or competed out of existence. So many things can go wrong. The bigger an individual asset grows as part of your portfolio, the riskier your portfolio gets. The bigger Bitcoin grows, it doesn't get riskier. As Bitcoin grows larger and larger, it actually de-risks. That's the difference. You have to capitalize on indexes. No one worries about the S&P index. No one worries about the NASDAQ index. But Bitcoin is far broader than them. It's world money. It is far broader than them, but it has 3, 4, 5x the performance. That's the trade of our generation. We can capitalize on this thing. We can buy it every week or every month over and over and over for years and years and years. It can get bigger and bigger and actually gets less risky as the thing matures. It's the trade of our generation because it's the index for us, for our generation, that is going to get less risky and it's going to get less volatile as we also get older. So as the risk, our propensity for risk starts to tail off as we get older, that's what Bitcoin is going to look like. That's why it's the trade of our generation. And it's the bulk. We can capitalize on this thing. It's the index for our generation. Individual assets are fantastic and we can trade them and we can hopefully make money from them, but it's not the thing that we can capitalize on. It has to be the index that we capitalize on. And Bitcoin is broader than the S&P and has 3 to 4x the growth of the S&P. It's the trade of our generation. It's the sweet spot. As we get older, Bitcoin's going to tail off, de-risk, get less volatile as well. But look, digital finance is exploding. And so there's many things that are performing really well. The best performer here is Robinhood, 444%. I can't capitalize my life on Robinhood. I got no interest. It's just an app, right? Great. Wish them all the success in the world. I'm not going to capitalize the bulk of my savings on Robinhood. Not going to work, right? That's why Bitcoin is the sweet spot trade. By the way, Bitcoin's up 100% since October 24. As an index, this is insane. The Nasdaq index is up 23%. Gold is up 42%. Good. But the trade of our generation, which is Bitcoin, which is more diversified than the Nasdaq, is also outcompeting it. It's basically the fourth highest performing asset, right? And it's not like an individual stock or a token. But in any case, digital finance is obviously here to stay. It's growing, and Bitcoin isn't really like those apps. Bitcoin is something else, right? It's a digital commodity. It's not an app, and so we can capitalize on it. But look, Bitcoin's up 100%, BNB coin's up 60%, Hood's up 400%. It's because it got absolutely trashed at the bottom of the last bear market, so it's up from there. But ETH is up 90%, right? And then London Stock Exchange Group, out the game, right? I used to work on the London Stock Exchange. It's a dead market, right? It's done. There's no innovation. Crypto is basically banned for the most part. It's a total joke, and it's down 16%. That's the market telling you exactly what's happening. Digital finance is growing and winning, and digital capital is growing and winning, and it's the index for our generation. It's a sweet spot trade for us. Looking at the data for the rest of this cycle and the positioning that we're in, we're certainly not early in this cycle, right? Bitcoin was 15,000. That was early. 115,000 is not as early. But I don't think we're at the top. The reason being is that look at the narratives getting pushed out of the US. The US financial media, it's all focusing on the unemployment rate rather than inflation. Even though inflation is higher than target, CPI anyway, it's 2.9%, target's 2. They look at PCE anyway, but it's higher than their target. But they're not focusing on that anymore. They're pushing out some unemployment narratives. If you know how the Fed operates, they just have two narratives. Inflation's too high, we need to draw it down. Unemployment's too high, we need to pump it. That's what they're pushing out in the media now. They're pushing out the unemployment narrative. Unemployment's a bit soft. That is code for we need social and political cover to ease rates and pump some liquidity into markets. Maybe the Fed doesn't do it. Maybe the Treasury does it. It's all the same. It comes out into liquidity. So if they're doing that, why would markets go down? Now, when the Fed come out and say, we're worried about inflation, get out of your trades. But they're not doing that. They're cutting interest rates. All major central banks, except the Japanese, are cutting interest rates. And their interest rates are still above CPI. So they're hardly in this position where they're actually saying, oh, we've got to be really hawkish. They can cut way more, and they can stimulate way more. And if the dollar gets weak, which it's doing, that gives cover to all other economies to stimulate as well, without their currencies getting trashed. If you look at early workforce activity here, it's starting to pick up. ISM is nowhere near some sort of top, right, compared to the last cycle or previous bull markets. We're down here. Why worry, right? They can pump liquidity into markets. That's what they want to do. They're getting the cover to do that through the narratives they're pushing, through unemployment rates, etc. So, why would this be the top of the cycle? As long as liquidity remains somewhat accommodative, then risk assets are going to do okay, and the things that have performance are going to perform. Advanced economies' debt as a percentage of domestic liquidity stock, we're hardly in a bubble, right? This was the everything bubble, the housing bubble. We're nowhere near that. Why would that be the top of the cycle? This is the latest cycle here with the average. So months from trough, global liquidity cycles. This could go for another 6 months, right? Which would put us into early 2026 before potentially getting some sort of drawdown. Inflation's too high. Everyone knows inflation's too high. They printed 50% more money supply in 2020. Of course, inflation's going to remain high. Of course it is. It has to remain high. They have to debase that debt. It's going to be above the run rate. Of course it is. It's not going to be 2%. They need it at 3, 4, 5%. It's just they're not going to tell everyone that. They have to kind of have these expectations of, well, we need it to... Everyone knows inflation has to run hot. GDP has to run hot, right? And they're going to pump the liquidity to make that happen. But they can't do it. They can't tell everyone. They've got to say, no, we're really worried. Kept interest rates too high, cut them, refinance. Inflation sparks again. We'll get another bear market. When inflation is way too high, they can't ignore it. This is liquidity cycles. Are we going to stop here? If the Fed says we're raising interest rates, we're really worried about inflation, then we're going to stop here. That's not what they're saying. They're pushing narratives about unemployment. They're cutting interest rates. The Treasury is putting liquidity into markets. So we can go into 2026, as you can see here. This is US Fed and US Treasury stimulus. This is from Cross-Border Cap, by the way. I'll link him below. You don't have to do QE for stimulus. They're not going to do QE because as soon as they do QE, everyone says, oh, they're doing QE, and so markets get detached again, right? They can do stimulus. They're not going to do it through QE. They're going to do it through other measures. The Treasury can do it, as you can see here. Not QE, other measures. They can do that. That's what they want to do. They need to debase the debt. This is the cycle here. Look, the other cycles topped out around 550 days, right? So that's why people are saying, is there going to be a top? Is there going to be a top? Bitcoin is the price of Bitcoin matters in relation to the dollar, because this is what we're looking at, the dollar. As long as the central bank is accommodative, they're getting more dovish, they're cutting interest rates, and the Treasury wants to just ease liquidity into markets, and that's what most central banks are doing, then I think Bitcoin's going to be okay. And a longer cycle is fine. Not going to be money printing like we got last time, but a longer cycle means that the assets that can outperform will just continue to edge higher and outperform. So I'm not really worried. And if things change, obviously I'll let you guys know. But if you trade Bitcoin and crypto, check out Bybit, deposit bonus down below, and Apex, deposit bonus and fee discount via the link below as well. I'm James, this is MoneyDG. Cheers for watching, and I'll see you the next one.